Back on June 11th, I made a video in which I talked about how the company Defiance was launching the first ever lineup of ETFs that would pay dividends twice a week to shareholders. This line of funds, which Defiance is calling their LightningSpread ETFs, are index funds that use an option strategy to provide biweekly dividend payments to their investors. On September 17th, the first ETF in their LightningSpread lineup was released, which is ticker QLDY, the Nasdaq 100 LightningSpread Income ETF. I wanted to talk about this fund sooner, but I felt like it was pointless because QLDY hadn't issued any dividends yet, which obviously would be one of the most important parts of analyzing this investment. But now that we have a full week's worth of distributions, we can now get an idea of its dividend policy, as well as what dividend yield we can expect from this fund. So in this video, we're going to take a look at QLDY and determine if it's a holding that's worth considering, especially if you like high dividends. So this fund is an actively managed ETF that seeks frequent income while maintaining the opportunity for indirect exposure to the performance of the Nasdaq 100 index, subject to a limit on potential investment gains. QLDY is the first ETF designed to make distributions twice weekly, aiming to deliver more frequent income than traditional income-focused funds. The fund uses its proprietary LightningSpread trademark strategy, which combines two approaches: synthetic equity exposure through deep in-the-money call options on the Nasdaq 100, providing participation in equity market performance, and also daily option premium generation through the systematic sale of 0 days to expiration or 0 DTE put spreads, seeking to capture rapid time decay from short-dated options. So now that we know its strategy, let's turn our attention to QLDY's dividends. According to its dividend schedule, this ETF will pay distributions every Monday and Thursday. For Monday's distributions, it always comes 4 days after the declaration day. For Thursday's distributions, they come 2 days after it's declared. On September 30th and October 2nd, the first full week of dividends was announced. We can see its first dividend payment was for 19.56 cents per share, and the other one was for 19.66 cents. Given this ETF's option strategy, we're unlikely to see too much variation in its distribution amounts in a very short amount of time. In other words, it won't be like JEPI or JEPQ, whose dividends can swing pretty significantly from one payment to the next. Now, when it comes to QLDY's dividend yield, Defiance's page, as well as every other financial website out there, currently isn't providing a yield, so we're going to have to calculate this ourselves. If we add up the previous week's dividends, we get 39.22 cents. There are 52 weeks in a year, so if we take this number and multiply it by 52, we get $20.39. This is how much you can expect to earn in dividends per year from holding one share of QLDY, assuming the dividends remain relatively stable. They can obviously rise or fall, and they will, but this is all the information we currently have. Dividing $20.39 by the current share price of this ETF, which is $51.01 per share, we can see this ETF currently offers a yield of 39.9%, or we can just round it up and say 40%. This is the yield that should be displayed on Defiance's website, as well as Seeking Alpha, Yahoo Finance, and others as soon as they update their information. So a 40% distribution yield is obviously really enticing, especially with those twice-weekly distributions. Although being paid twice every single week does sound really appealing, if we are being honest, nobody really needs to be paid twice a week. If you're a very passionate income investor, then you are going to love seeing all those dividends hit your account. But I just can't think of a living situation where someone living off dividends would need to collect 2 payments every week. We all know that a typical job usually pays every 2 weeks, and there might be some instances where if you're an independent contractor, you could get paid more frequently. But getting dividends twice a week is really the main sales pitch to get you to buy their LightningSpread ETFs. And I have no doubt that if these LightningSpread ETFs are a huge hit and they attract a lot of investors' money, then I'm sure some company, whether it's Defiance or YieldMax or someone else, will eventually introduce a 3 times per week dividend fund. That I feel pretty confident about. But it's really a gimmick, again, because nobody really needs to get paid twice a week or 3 times a week. It would help slightly in terms of compounding, but the effects wouldn't be too significant. But if these turn out to be really great funds, then certainly no one would complain about getting paid twice a week. So what we really need to do now is examine its strategy from a share price perspective. Going back to its description, there are two distinct things that we need to focus on. First, QLDY is a synthetic ETF, which is going to imply a lot of risk. Secondly, QLDY is a 0 days to expiration or 0 DTE fund. Based on these two features, we already have other similar Nasdaq ETFs that exist. The very first 0 DTE fund was ticker QDTE by Roundhill, which came out less than 2 years ago. Another company with a 0 DTE Nasdaq fund is YieldMax, which has QDTY. Now there's one thing that sets Defiance's fund apart from these other two, besides the twice-weekly dividend payments. QLDY uses in-the-money call options, whereas QDTE and QDTY both use out-of-the-money call options. I'm not going to go too in-depth into this because that would be long enough to dedicate an entire video to. But SoFi has a really good article that breaks down the difference that I'll leave a link to in the description. But out-of-the-money options, which the Roundhill and YieldMax funds use, do perform better when there's a substantial increase in the price of the underlying stock, or index in this situation. But this also increases your exposure to risk, and there's also a higher amount of volatility when using this. Based on this fact, the LightningSpread ETF should hopefully be a safer pick. So now let's look at the share price movements for QLDY as well as these other two funds side by side to each other. We'll start by comparing it to the underlying index. Again, there's not much data to go off of because it's been trading for less than a month. As it should be no surprise, it does trail the index it uses options on. It explains this on the fund's page under Important Disclosures. Price participation risk. The fund strategy caps potential upside participation in Nasdaq 100 gains while maintaining full exposure to Nasdaq 100 losses, which may not be offset by option income. I also need to highlight that we haven't seen how well QLDY does when the index takes a downturn. We have for the YieldMax and Roundhill ETFs, and the results definitely weren't pretty for Roundhill. QDTE never fully recovered from Liberation Day, which was when Trump announced all those tariffs, and it sent the markets free-falling. The YieldMax fund did recover, although it was very slow to do that. So that's definitely going to be a big concern for QLDY as well. But now let's compare the share price movements of QLDY with these other two 0 DTE funds. The results so far are actually pretty encouraging for Defiance. Despite the limited number of data that we have, we can clearly see that QLDY does appear to be much better at capturing upside, at least at this point. In the past 5 days, the LightningSpread fund is up 1.01%, while the Roundhill ETF is up only 0.48%, and the YieldMax fund is up 0.61%. Expanding out to 1 month, we see that QLDY, again, hasn't been around long enough, so these percentages that you see down here are worthless. If we went off these, it would give the other two ETFs a 17-day head start. So I'll go ahead and calculate the growth of all of these investments from September 18th to today. According to the information, QLDY is up 1.37% in share price, QDTE is up 0.25%, and QDTY is up 1.04%. So this new fund appears to be doing quite a bit better from a share price perspective. And on top of that, QLDY also offers the highest yield. QDTE yields 30% and QDTY yields 25%. So ultimately, I think this is pretty encouraging. This could be a situation where Defiance looked at QDTE and QDTY and saw what worked and what didn't, and made changes when coming up with their own fund strategy. The biggest concern for me at this point is how well will it do when the index falls hard. My other covered call funds like SPY-I and QQQI have done a good job at recovering from dramatic falls, but that remains to be seen for QLDY. Let me know your thoughts in the comments, because honestly, I didn't think this fund would have a lot of potential given how bad many of Defiance's other ETFs have been. I'm not endorsing it at this point, but I am hoping it continues to do good. But with that being said, that's going to wrap up today's video. If you'd like to connect with me and see what's inside of my own high-yielding dividend portfolio, then feel free to check me out over on Patreon. You'll be notified when I make trades, and you'll get access to our Discord with other high-yielding investors. Thanks again for watching. Please be sure to like this video and subscribe if you want more high-yielding investment content. Thanks again for watching, and I hope you all have a great day.